Hi, my name is Denise Deviney. I'm Vice President of Operations at the Bipartisan Policy Center here in Washington, D.C. I've been involved in nonprofit accounting and financial management over the past 15 years as CFO for Habitat for Humanity International, as well as Elizabeth Glaser Pediatric AIDS Foundation. The following is a short webinar for those of you who have recently founded a nonprofit or in a leadership position at a small nonprofit where strong accounting expertise is not currently at your disposal. This webinar is designed to give you the basic concepts of nonprofit accounting and best practices in financial management. First slide. The board has a few responsibilities. It's the board's responsibility to ensure that the funds raised are spent in accordance with the donor's instructions and that all monies raised and spent are in line with the mission of the organization. It's also the board's responsibility to ensure that strong policies and procedures are implemented in order to protect the assets of the organization. The board needs to ensure policies and procedures are followed consistently and working as designed. An external audit includes a review of this, but it's important for you to have a level of assurance of your practices before an audit begins. The board also needs to make sure that the organization has the necessary funds to carry out its mission. A regular review of financial statements, bank statements, and reconciliations will help towards that end. Next slide. It's the board's responsibility to ensure there's a strong system of internal control over the organization's assets and finances. Policies and procedures should be documented, implemented, and followed consistently. Asking questions is one good method of providing oversight and monitoring of a procedure, though it should not be the only method used. As CFO coming into a large organization, I have reviewed documented procedures and asked staff what their process is, and they rattle off the documented procedure verbatim. But then when I observe what they're actually doing or a problem surfaces, they tell me, "Oh, I told you the procedure. You didn't ask me what I was actually doing." So it's important to know if shortcuts are being taken that might jeopardize your procedures and your system of internal controls. It's important to ask questions, observe, review, and on a regular basis, so that you know what those procedures that they're actually following. We'll be talking further about internal controls later in the presentation. Review by the board is important to ensure that applicable laws and regulations are being followed. If you review your state filings and the due dates, your payroll filings, and the review of the Form 990 to the IRS, all that would be helpful for you. It's the board's responsibility to ensure resources are used for its purposes and that the organization does not engage in unauthorized activities. This slide mentions tone from the top. When boards and senior leadership make all of this an important topic, strong policies and procedures stay at the core of your operations. Next slide. The core policies you should have in place is a conflict of interest policy and a procedure for oversight to ensure that it's working as designed. Most nonprofits distribute an annual questionnaire to their board and senior staff to make sure that their conflict of interest issues are resolved. Whistleblower policy. Important to have an avenue for your staff, partners, and all stakeholders to be easily able to alert the board to potential problems. It's also important that your whistleblower policy include a policy about non-retaliation to employees raising the issue. Another policy, document retention and destruction policy. Please ensure that you have compliance with your donor grant agreements, state and federal agencies, and also include how to and when to destroy documents. Another good practice is to have a policy on how compensation and benefits will be decided. Next slide. Let's talk a minute about fraud. We've all heard the horror stories from nonprofits. It's our job to ensure we have a strong system of internal control to make it impossible for fraud to take place. This slide discusses the fraud triangle. First, incentive. At times, one might be experiencing a traumatic event. Their mother is hospitalized and there's pressure for money, or there's simply pressure from high credit card debt. Couple that with an opportunity. If there's little or no internal control in the financial environment, that creates an opportunity. Add to that one's ability to rationalize their behavior. And then that, along with the lack of appreciation by the board and leadership to have a strong internal control environment. Fraud can happen given these set of circumstances. And again, it's our responsibility to make it impossible. Next slide. So, a strong system of internal control removes the opportunity for a staff member or volunteer to defraud the organization. A strong system of internal control mitigates the risk of fraud. It also gives us reasonable assurance that we have efficient and effective operations, that our financial reporting is reliable, and that we have compliance with applicable laws and regulations. Next slide. Segregation of duties. This is what I consider the most important aspect of internal control. One individual cannot be in control of all aspects of a financial transaction. Keep the following functions with separate people: the authorization of payments, the custody of funds, that's the checkbook, the record keeping of revenue and expenses, your bank reconciliations, and the general ledger account reconciliations. We'll talk about tips on how best to do that in a small organization later in this presentation. Next slide. To reiterate, a few further basics about segregation of duties over cash receipts and disbursements. Do not have one employee do everything with the cash disbursement process. In a small organization, have someone outside accounting open up the bank statements and complete the reconciliation. You can have your executive director or perhaps a board member do that, or at least review it afterwards. Keep close tabs on the payroll data. The same person who hires new employees should not be the one performing the payroll function. Next slide. Examples of strong controls. The bank statements should be opened and reconciled promptly, and that should be done outside of your regular accounting personnel in a small organization. Best practice is to do it immediately, or at least in the same week. Don't let it linger, because the more on top of it you are, the better off everyone is. Require 2 signatures on checks over a certain amount, typically $250 or $500, depending on the size of your organization. Never, ever sign blank checks. It's just not a good practice. Keep the same controls in place over wires and ACHs as you do over your checks. Cash receipts. Keep a log of all checks received day by day and ensure that each check makes it to the bank daily. Mandatory vacations. I just heard about a city manager of a small city in the Midwest. She was the only full-time employee. She did everything. She set up a separate bank account where she funneled millions of dollars. She was only caught in her acts years later when she finally took a vacation. And the person who was substituting for her opened the mail, came across a very odd bank statement. Make sure people go on vacations. It's a very good internal control. Next slide. I know it's difficult to put this degree of internal control in place in a small nonprofit. Some of the limitations and difficulties are you have small number of staff. You also have limitations with software. Work overload. People have too much to do and there's just not enough time, and so shortcuts are taken. Management or board might even override a system just for expediency, so they're not leading by example. Collusion. It's hard, very, very hard to catch because you've segregated the functions, but now you have 2 or 3 people colluding with each other to defraud the organization. Conflict of interest. It's best just to avoid it where finance is concerned. Next slide. Tips on implementing internal controls where you have limited resources. It's important to be creative. So utilize program staff, volunteers, the executive director, or board members for certain functions. Someone once told me, I trust everyone. But as CFO or ED or board member, you can never rely on that trust. Rather, you rely on a strong system of internal controls to protect the organization and keep everyone out of trouble. Next slide. So, moving on from internal controls, a major responsibility of the board is to approve the annual budget. Ongoing, the board also needs to ensure that the organization has a system that regularly tracks revenue and expenses actual to budget. They need to ensure expenditures are in line with budget, and they need to approve material variations. They should be explained so that the board can approve them or not. They do this by reviewing the financial reports monthly. Quarterly might be okay for smaller organizations. Also, board should ensure that donor restricted funds are reported separately and spent according to donor intentions. Next slide. The board has further responsibility to ensure a few things: that the organization has adequate resources, adequate reserves for future needs, that they make an adjustment to budget as needed throughout the year, and they have the responsibility to ensure that expense policies are followed and that receipts are obtained. The IRS requires that you have receipts for all expenditures over $75. Otherwise, it should be treated as taxable income. You should also ensure that receipts are emailed timely to donors for their donations. Next slide. The organization can decide whether to hire an external auditor for a full audit or for a review of their financial statements and system of internal controls. Reviews are less rigorous and they are also less expensive, but they don't give the same level of assurance. If you are below the IRS threshold for an audit requirement, you should also check with your donations, your funders. They may require an external auditor review, and you should also check with your state statutes for their audit requirements. External audits give donors an assurance, and it helps you with future fundraising. Next slide. So, board members are responsible for actually hiring the auditors. Best if the board is made up or has a few members that have specific financial expertise. Boards select the auditor and they must oversee the audit process. At the conclusion of an audit, board or finance committee members should meet with the auditor, and that meeting should also include a separate executive session between the board and the audit without the staff present. It's also best practice for boards to meet with your accountant or your CFO alone once a year. That wraps up this webcast, and we appreciate your joining us. Thank you.